Okay, Expedia. It is in a massive downturn, even though we see this rally here. Okay, even though we see this rally off of the Christmas crash, Christmas lows, whatever we saw here, technically we are in a big, big downtrend. Mike, I'm not going to answer that right now. I'm not, you know what, guys, I'm not going to answer any other questions until I'm finished with Expedia. Okay, we're in a big downtrend. In fact, it got to this resistance point, which was pretty decent resistance, around 128 and change, and it rejected there, as you can see right here. Fundamentally, so this is the technical side of it. Fundamentally, this stock, this travel stock, which is a great stock, but they depend so much on international exposure. They have so much global exposure. Okay? Listen, anything can happen with earnings. Anything can happen with earnings. But I think this is a fantastic opportunity to take advantage of what I see as potentially a very, very poor earnings report. Technically, fundamentally, the reasons are there for it. Again, anything can happen. But technically, fundamentally, the reasons are there. So, I want to find something bearish. The easiest thing, obviously, is just a put spread. But first, let's go through how we normally go through here. And Janie, are you able to follow? Perfect. Okay, today is the, what is today, the 7th? Is that right?
Yeah.
The 7th?
I think that's what
Yes, it is. Okay, stock is 127.5. What is the expected move, everybody? Okay, we got 8.5, 9.5. Okay, 810 to 820. Well, we're sitting right in the middle of two strikes, but let's look at the 127 straddle. Okay, the 127 straddle is trading $8.70. It's roughly 30 cents in the money now. So if we take that 870 less the 30 cents, we get $8.40 roughly. Okay, everybody got that? Good. Wayne, let's go through this again. We're looking at the 120. We want to look at the closest at the money straddle. Okay. Now, the stock is in between two strikes. It's in between the 127 and 128 strike. So let's look at the 127 straddle. The call is trading 460. Put's trading 420 right now. Fluid market. So that gives us $8.80. Okay, 880. The call is now roughly 40 cents in the money, right? The stock's trading 127.38. The 127 call has 40 cents of intrinsic value. The rest is extrinsic value. So if we take that 880 less the 40 cents intrinsic value in the straddle, we come to $8.40. Okay? Wayne, are we good with that? Perfect. Okay. Expected move is 840. Gives us then an expected range of 119 basically, 119.10 up to 135.90. Okay? Again, looking at the charts here, I want something bearish. Everybody with me? So, same thing that I talked about on TD this morning. Well, I'm looking for February 8th right now, Shane. We may look at a different setup, but that's the move for earnings that we just calculated. Okay? So what I talked about on TD was just a simple put spread. Actually talked about the 123, 118 put spread. Okay, right now that's trading about $1.25 because the stock is lower than where it was when I talked about it. In fact, just dropped about 50 cents since we've been talking. Right, Russell, I talked about it to buy it for like $1.10. It's trading $1.25 now. Which still is not bad reward to risk. Even if we paid $1.25 for that, it still gives us 3-to-1 reward to risk. Okay, let's take a look at next week just to see if we can buy any additional time and not have to pay much more in premium, right? We'd always want to buy more time if we don't have to pay more to buy that time. So let's see what that spread looks like for next week, the 123, 118. Okay, it's about 15 cents more. So that tells you there's 15 cents of additional premium for that extra week. Everybody see that? Now that's using the same strikes. But what we can do, since we're buying more time and that expected move is going to be greater, is let's see if we move the strikes down by $1 each here, if that adjusts the price back into our wheelhouse, and look at that. Okay, so I still have a $5 wide spread here. If we could get this, it's $1.30 midpoint, but if we could get that for $1.25, if we get a little rally back in the stock here, that's pretty darn good. Okay, the other thing we can start looking at is potentially a broken wing fly. Now, certainly involves more contracts, but still can give us a big leg to the downside. So let's look at the 123, 118, 117 broken wing fly. Now we're talking, and this is for next week, now we're talking right at our risk parameter where we'd like to be at $1.25. So there's a trade-off there. Do we want to do the broken wing fly, add in extra contracts, or maybe pay just a little bit more for a put spread? Just a regular good old-fashioned vertical put spread and not complicate things. Well, if all was equal, I'd rather just buy the put spread, right? Less contracts, less complication, keep it easy. But I also want to evaluate. There you go, Ken. I love that. KISS. Jane, you know what KISS means?
No.
Keep it simple, stupid.
Got it.
Right? So I want to do all that, and I want to, balance the ease of the order with also the reward to the risk. So what I'm looking at doing, and there's no rush, right? We don't ever want to rush into a position. Yes, the stock is going down. It's moving against us, making our put spread more expensive right now. But we have all day here. Maybe the market's going to turn around a little bit. Maybe Expedia will turn around a little bit and just rally back the dollar or so that it just lost over the last 15 minutes and make these put spreads cheaper. If not, then maybe we'll jump in. But again, I would rather wait for our pricing at our level and not let it get away from us than run into it and have to pay up a little bit right now. Does that make sense to everybody? So what I'm going to put out here is next week's 123. Actually, let's move down one strike. Next week's 122, 117 put spread. It's $5 wide still. We're going to put that out at a $1.15 bid. Now that's below the market right now. Much like in CMI, we're kind of waiting for the rally to happen so our put spread can go lower. Same thing here in Expedia. If the stock continues to go down, we'll make an adjustment. But we don't ever want to feel like we are compelled, pressured, rushed into doing something. Right? We don't ever want to have that, and I guess this is acronym day after Ken posted KISS up here. We don't ever want to feel that FOMO. Because that's when emotion starts to play into our thought process and gets us in trouble. FOMO, fear of missing out. All right? Everybody with me? So I'm going to put this signal out for 115 bid. Again, we're not going to get filled right now. Stock probably has to rally back close to $1, maybe 127.5 for us to potentially get filled at 115. But that's okay. We have time. We have time. Okay, so let me put this up here. The Feb 8th 123, 118 put spread is about $1.25. Still really good, but I'm looking to buy us the extra week. Okay, by adjusting our strikes down, which makes the spread a little bit cheaper. Okay, so the signal that I'm going to put out, Ken, and everybody, is this one, is the Feb 15th signal. Again, if we don't get filled, maybe we adjust it later in the day. But this is the signal that I'm going to send out right now.
Why are you putting it at the 15 level? Because
You mean the Feb 15th? It's buying us an extra week, so expiration is not until next week, rather than just a one-day opportunity to make money because earnings are coming out tonight.
Oh,
If we do this week's options, we have one day to be right or wrong.
Okay.
If I can buy myself extra time and only pay a little bit more to buy myself that extra time, I always want to do that.
Right. Okay.
So I'm willing to pay just a little bit more to buy that extra week of time. I'm talking to Janie about that here, guys. So, all right. So everybody clear with what I'm doing here? I'm going to get that signal out right now in Expedia. And again, many times, often we see that maybe the best reward to risk is a butterfly, a broken wing butterfly, But in this instance, Ken, I'll refer to you again. I think the best option, no pun intended, is to KISS, keep it simple, stupid, by doing just a plain vertical put spread. Any questions, everyone? Anyone? Otherwise, I will get this populated up in the room, get the signal out, and I'll be right back. And who was asking before? Todd, I think it was you who were asking, what price am I looking to execute the signal at? You'll see my order is going to go in, and I don't put it in until the signals are sent out via push, via email, posted in the room. So my orders go in last after everybody. And you'll see when I put this in, my order is going to be for $1.15. Okay, so here is the signal in the room. Now it's posted in the room, and now it's going to go out via push. And Janie's sitting here next to me. She gets to see what Mike Shore and Charlie Moon and Mike Patton and myself do behind the scenes here. So, when we say that we're putting these signals out, she sees me working kind of feverishly on my 6 monitors here, getting this other stuff done. All right, so I just sent the push. Janie, let me know when you get it, please.
Got it.
You got it already?
Yeah.
It's because you're sitting right next to me, right? And the radio waves from here to there. Awesome. All right, Todd, you got it? Awesome. So I think these upgrades, whatever my developer did, actually did something. Looks good. All right, now I'm going to go put my order in. So here's Expedia. Look for that vertical. And we want to do the 122, 117. And we want to pay $1.15.
What does it mean? Because this is next week, but it says day order only. Because it would be a day.
Right, so day order only means this order, this signal, is only valid for today. If we get to the end of the day and we haven't been filled, cancel the order.
Okay.
Because we don't know, we don't want to take the risk overnight. What if the stock opens against us tomorrow morning and we fill on this order at a place that we didn't want to get filled? So our entry orders are day orders only. We watch it. If we're not filled by the end of the day, we reevaluate the next day to see if we want to put it out there again. So when we're entering the order in here, there is an option to put in their day order or good to GTC, which is good to cancel, meaning that order will just stay out there until we either get filled or cancel. Entry orders, we don't want GTC. Entry orders, we don't want to be beholden to the market. So that's why we only say this is good for the day. If we get filled in our parameters today, great. If we don't, we'll reevaluate tomorrow and resend the order if it's appropriate.
My confusion is when it's a day to day that you have February 15th.
Doesn't matter.
It doesn't matter.
Doesn't matter. The
Because
order
that was
is
the level that.
exactly.
Okay.
Exactly. And by the way, were you able to spend time with Patrick Hammond yesterday?
A little bit.
Not as much though as you wanted to for
No,
the signal terminology, or
explained quite a few. Well, no. He said we'd talk more today.
okay.
We didn't get going. But we talked a little bit. I think I'm gonna move up here for a month and just, keep this white card on you guys.
I'll tell you what, if you move up here for a month, you are more than welcome to sit here.
Yeah,
Yeah, we're looking at
every
Twitter right
single
now.
day.
Stocks trading 34. What is the
Serious.
expected move for this week?
Coffee, I would not mind.
29.70 to 38.30. Anything that we see here, this was